Hello and welcome to Insider On Air and today's webinar in association with WNS. Today we will be discussing the modernisation of finance functions for the digital age, focusing on the London insurance market. I'm Fiona Robertson, contributing editor at Insurance Insider, and today I'm joined by a great panel of speakers. We have Kevin Hayes, Head of Finance at Pool Re, Deepti Janak, Group Finance Director for Volante Global, Benji Meuli, Group Chief Financial Officer at Convex, Beadle Navaraj, Senior Director of Insurance F&A Practice for the UK and EU at WNS. And finally, we are also joined by Serge, Thieriet, Chief Financial Officer at Howden Broking. It's great to have you all here. Welcome. So I would like to remind our audience that we are taking questions. Please do submit any questions at any point during the webinar and we will try our best to address them. So we have lots to discuss. I want to get right into it. And first off, I'd like to focus our attention by asking the panel to pick out the one key issue that they think would most help the London insurance market to modernise finance functions. If you had to really hone in on one issue, what would that be? And can we start with Deepti, please?
Yeah, thank you very much, Fiona. Hello, everyone. I guess for me, the key issue is legacy in the past. While we need to learn from it and we need to gather the knowledge that we need, but we should not hang on to it. And that's been the most difficult part within the insurance market, especially for the finance functions. We love our spreadsheets. We hang on to those spreadsheets. We build more spreadsheets. We link them up using the most modern functions. But again, we go back to the spreadsheet. So I think we need to go beyond that. We need to ensure that we are actually looking into the future, understanding what the market needs, what does the company require, and make finance more of value add rather than a report building function. So I think everything kind of stems from kind of the legacy, the experience, but try not to fit your previous experience into the current world or even the future.
Mm-hmm. Okay. So moving beyond the past, anybody else have something that they would like to add in terms of the one key issue that they would say would make the most difference?
Fiona, if I may, and hello everybody. I think that the question that you asked was around the London market, and whilst I agree with everything that Deepti said as far as each of us individually in our companies is concerned, I think to get the market moving forward, we need some collective will and some collective effort. So in terms of the way that information around transactions circulates around the market, there's far too much paper. There's not nearly enough delivered electronically. And I think as a result of that, right at the beginning of the process, we have to start by manually inputting an awful lot of information repetitively. We're all doing the same thing in all of our different companies. It's error prone, and that's where the problems really start. So I think we actually need to recognize that there's some collective responsibility here to come up with some ways of, in particular, data entry at the beginning of the process that would allow us all to be a lot more efficient.
Okay. Yeah, I want to go for it, Kevin.
Oh, sorry. Yeah, I was thinking I completely agree with that as well, as that we're very much creatures of habit. We continue to do the same things over and over again, and when we do look at what we want to change, we tend to look at it from the perspective of how we currently do it. So we're, again, then that the bias is going to be towards doing a similar thing, maybe slightly better. So looking at it from the end product is probably a better idea of thinking what sort of solutions are out there that we can use, not trying to shoehorn the way we currently do it into some fancy new software. And that can mean even looking outside of the insurance market into some of the success of these other sort of e-commerce type businesses, that so much of the focus is on the customer journey rather than sort of what we want to do within our organisation. It's how other people want to interact with us.
Mm-hmm. Okay. So, yeah, we're getting some themes come through here. Beadle, go for it.
Hi, guys. Yeah. And if you look at the whole value chain in the finance and accounting, the record to report is kind of becoming a race to report, because we are always actually bound by timelines, right? We want to actually rush to our month end. We want to complete our reporting. Then we want to move to our regulatory reporting. It's like a cycle of chain that you are actually kind of working day in, day out. So the shift of time spent in preparing the reports versus analyzing the reports is actually kind of taken more than 80% in preparing the reports than probably 20% is spent in analyzing the report. I think that kind of a shift, we need probably 20% to prepare everything and then 80% analyze, and using our analytics more in finance to kind of bring more business insight to the organization.
And actually, leveraging what Beadle just mentioned, I would push it even further. I think that finance as an organization, finance functions, tend all too often to be backward looking. Yeah, we report on figures that represent a past situation, and I think trying to shift that to more forward looking views by spending way less time in terms of building those reports that look backwards, and then much more spending time on forward-looking scenarios that they project them ourselves in the future. For me, that's a way of supporting it more. So
Okay. Yeah, so it feels like we're getting a few themes already in terms of looking forward, collective action, and making time for analysis and not grunt work. I want to focus in a little bit on some of the hurdles. Kevin started alluding to one hurdle, and that's just the faith that in looking back at what we have been doing. But what other hurdles do we think are preventing the London market from addressing some of these issues and moving away from its manual intensive past towards a more automated ecosystem for finance? And perhaps we could start with Benji first.
Sure, thank you, Fiona. Well, I'm going to give an answer to this question, which is probably not going to be terribly helpful to most people. I mean, the big problem, and Deepti already said it, is legacy. Companies that have been around for decades, or in some cases centuries, have a legacy of systems, data buried in systems that are often out of support now, that don't really talk to each other. It's an incredibly difficult environment in which to operate. In a previous life, I was CFO of Catlin. Even though Catlin was only sort of 30 years old by the time it was sold, it had quite a lot of that legacy. And I can only imagine what it must be like in older companies. And it's really an impossibly difficult situation to get yourself out of. I can't think of anybody who's really successfully got their way out of that. I think about all that people are able to do is to outsource some of their worst processes to people like WNS, who are very skillful and very capable of taking on board bad processes, throwing people at them and doing them a little bit better. But it doesn't really get you all the way to automation. Now, we started Convex, we started thinking about Convex back in the middle of 2018. And you know what? It's incredibly refreshing to be able to work with a blank sheet of paper. We will build our own legacy, but we won't build it for the next couple of years. And we made a strategic decision right at the beginning of Convex. I remember, Stephen, Paul, myself, we were sitting actually in the garden in my house in France talking about were we going to do this or not. And we kind of made a strategic decision at that point, and this addresses some of the points that Kevin made and Serge, when we said we were not going to do anything where we didn't add value. And that pretty rapidly led to a view that we were going to outsource the back office and the middle office of the company. And of course, when we started talking about this, I thought, well, that's great. That would make a lot of sense for insurance and claims, underwriting and claims. But of course, it wouldn't apply to finance, would it? Because how could it? We all need our finance teams and our spreadsheets and everything else. And then after a day or so, I realized, no, it actually does apply to finance as well. And indeed, that's what we have done. And we've consciously confined our own finance team to only looking at the value-added pieces. And I said to myself, we don't add any value in just producing the reports, producing the numbers. There's no value in that whatsoever. The value starts when you receive the information and you can get underneath it, start analyzing it, as Beadle said, and hopefully then start, providing advice and input to management to enable everybody to run the company better. And to do that, as Serge said, you need to look forward. I think we're also very conscious of the fact that people coming into even this new organization, we do tend to fall back to our old habits. We call it gravity within Convex. There's an inevitable pull of gravity. People just reach for a spreadsheet the first time they want to understand something. And we're doing our best to try and fight against that. And to do that, actually, one of the things I've done is to mix the skill sets within the finance function. So we're not employing just accountants. We're also employing actuaries and other people who have a different mindset, use different tools, speak a slightly different language. And actually the interplay between those two has turned out to be incredibly fruitful. Now, we're not all the way there yet. What we've built so far is robust and it works. It's not as fully automated yet as we'd like it to be. We're going through a process over the next 12 months or so, hopefully to eliminate pretty well all of the manual interventions that currently exist between systems. But I'm really hoping to get to the point by the end of next year where almost producing any regulatory return or any financial report to our shareholders is almost literally the press of a button. And we hopefully will be able to spend our time on analysis rather than turning the handle. But it's even with the blank sheet of paper, actually, it's more difficult than you think.
Okay. So we've got some tips there in terms of outsourcing and use of different kinds of people skills. I want to break it down a further step. So we've talked about moving away from a manual pass to a digitized automated system. In the current market, we're obviously dealing with another challenge as well, that of COVID-19, where not only do we potentially need automated systems, but also systems that are working in a virtual or remote world. So which is the bigger challenge in terms of those stages of progression, and has COVID-19 helped us accelerate any of that improvement? Possibly Kevin, can we start with you, please?
Yeah, sure. I think, COVID-19 is no denying that it's permanently changed the way that we work. If we don't accept this and embrace it, we're missing a golden opportunity to completely rethink the way we work. This is probably the biggest thing that I've gone through in my shortish career. I think we can use this to completely rethink the way we work. Deepti mentioned earlier about sort of learning from the past, not being too confined by it, and we should be able to use this sort of moment in time for a catalyst for change. It's not going to be a one-off event, us all sort of working remotely and things like that. Other events are going to occur that restrict companies from physically accessing their premises for a period of time, and that's going to require employees to be able to work remotely again. If companies aren't prepared for this after sort of 12 months of going through it already, there's not going to be much of an excuse in the future. I did read the other week a survey from the Professional Liability Underwriting Society that only 14% of London market staff that they surveyed actually wanted to return to the office full time. 16% said they want to work from home full time, but then the remaining 70 wanted a 50-50 blended split. So you can see there's already a drive from employees now that they've had a taste of this, that's sort of what they want in the future. We knew it's been coming over the years that people were talking about sort of flexible working and things like that. But this is completely, it's accelerated it a lot, and companies are going to need to have that infrastructure there to be able to provide this for employees. And another major thing is the digitalization of finance operations has a significant impact on business continuity and operational resilience. So from this perspective, finance operations need to be able to work uninterrupted during these events. I've had plenty of discussions with peers and colleagues from previous employment, and it appears that across the market, people have transitioned to this remote working fairly well, with only minimal interruptions, which I was quite surprised with, but that's a good sign for the future that we can handle something like this. But then you have the instance of companies that may not quite so far along the digitalization life cycle, that may be finding this time a lot more difficult. And then obviously that's going to be compounded if they're not that far along that life cycle, that the economic environment is extremely tough. There's economic uncertainty, there's lower returns, so that's going to impact companies' abilities to invest in their sort of digital future. From Paul Reed perspective, we were sort of lucky enough that 18 to 24 months ago, possibly, we had transitioned to a fully sort of cloud-based infrastructure. So we could pick up our laptops and all go home, which appears to be across the market. This is something similar that's happened. But in terms of the finance function itself, we worked well, but it clearly highlighted some of the processes that were far too manual. We knew was moving away from a lot of them, but then glaringly, when you're sitting in your kitchen or an office and you need a piece of paper signed by someone that's across the other side of the country, you quickly notice that you haven't ticked all the boxes. So we have accelerated some of the plans that we had. We've got some quick wins in terms of workflows. Effectively, our system our ERP system's only sort of a couple of years old. So we have had some quick wins there in terms of automating some of the processes and using workflows. But we've also had to sort of re-look at our bigger plan and move some things around to reprioritize.
Okay. So for you, it sounds like it was a bit of a challenge, but ultimately pushed you to greater digitalization. Are there any potential concerns over security when it comes to remote working and finance? Has anybody had any experience in dealing with that issue, or feel that COVID highlights that as a vulnerability? Beadle, do you want to?
Yeah, sure. So virtual finance operation is kind of come in twofold, right? One is, first we look at how do you digitalize your process, as rightly mentioned by Kevin. And once that's the first step, and once you kind of get into that journey, then you kind of look at how do you kind of bring into cloud, mobile-based, and then how do you automate and transform the whole process, right? So the security concern is equally increasing, right? So one of my uncles actually asked me when we were in the midst of COVID lockdown and we were all kind of running around to move everything to virtual. And he asked me one question, okay, what if the entire virtual thing collapses? What are you going to do, right? So we need to kind of equally plan to ensure that every process in a domain kind of get triangularized with technology and the risk teams to ensure we kind of equally build a very resilient model. And the security actually kind of have in two ways, I would say, the threats impacting organization from the cybersecurity side, where you are seeing in the market a lot of phishing attack, cyber attacks, etc. And the other one is your digital security, right? How do you safeguard your digital assets? Because you are now moving everything to digital, right? Now people can access your client information, you can access your bank details. how do you kind of safeguarding those information from the processes? So it's quite important for us to actually understand and more work closely with our risk and technology teams and to build a resilient model to ensure that address the security issues. And it's not only limiting to finance, it's a broader issue to all the organization-wide issue. So it is something that carefully has to be thought through. And also with many insurtech companies coming in, which is a great ecosystem to partner with them and kind of work with different tools. But equally, we need to ensure every tool that we have is being really protected by the controls, and all the controls are being audited. For example, if you ask for a SOC 1 type 2 report for all the controls maintained for your systems, I'm not too sure whether all the insurtech organizations have that in place, right? So it's equally important to build that governance around security and give equal importance as equivalent to have a mobile and a virtual operations.
Okay. We do have a question from the floor that I would encourage others to put in any questions if they have them. I think if I've understood it, the essential question is, do we agree that a large number of organizations or insurance organizations underestimate the momentum of digitization and the scale of disruption from digitization, and then potentially some surveys suggest that business models might not be economically viable if the industry keeps digitizing. I'm going to guess that the industry sees digitization as a goal that would actually help it rather than threaten insurance. But do we feel that the London market underestimates the momentum of digitization and scale of change?
Shall I take that one, Fiona?
Yes.
Yeah, I think it probably does, actually. It kind of goes back to the point I made earlier on about the need for collective action. I think the market is very much still in the rut of doing things the way it has for, well, I'll say it again, for decades, if not centuries. And it's very difficult to get out of that. There's not a lot of advantage in being the first or the only mover, but somebody one day will. And somebody one day will secure a long-term and sustainable, expense advantage compared to peers. And it's only when that really happens, and it happens in a sizable and a noticeable way, that I think you'll start to see a pressure sort of building around the market for people to take action. I mean, these things are difficult. They're not impossible. They're difficult. And most of the management of, I dare I say it, the London market companies is not that tech savvy. People are much more concerned about underwriting risk, understandably, and all the other important aspects of doing our business in the normal way. So it's never been an industry that has been enormously technologically competent, and it's going to take quite a bump and quite a jolt, I think, to get it to move forward. But the advantages, therefore, of being one of the first movers and securing that competitive advantage are enormous. I mean, the expense base of the London market, I think, is appallingly high. If we think that every dollar, 40 cents of every dollar any customer spends on insurance premiums is going in operating costs in the market, I mean, that's not a great value product for our clients at the end of the day, and we do need to do better, but it is difficult.
Okay. I want to cover the collaboration theme that you talked about. So one of the questions I had was to what extent companies, whether brokers or carriers, could try and move for digitization by themselves, or whether it had to be in collaboration. Then you've argued that it has to be in collaboration. I guess I'd like to start with Serge on this one, but where do you feel brokers and carriers could be collaborating to try and drive more digital finance?
Sure. Well, in terms of controlling the pace of modernization, I mean, especially in the back offices and in finance, the brokers can very much deal with that on their own. As far as I'm concerned, there are plenty of opportunities to modernize and digitize a finance function, irrespective of the sector you are in, with better general ledger tools that are better integrated with reporting and budgeting modern tools. By revisiting your processes and constantly facing the inefficiencies of that, you can definitely drive that on your own. But there is also a very important component, which is on the front office and the solutions that you have with the front offices. Obviously, you can drive part of that on your own as well by having more modern ERPs. Deepti was talking about legacy and gradually getting rid of your legacy tools wherever makes sense at the pace that you can afford. But there is also a very important component of collaboration with partners in lots of areas. Okay, we contact the clients, the way we sell to the clients. That has a really important component of cooperation with carriers and brokers, and that also has a knock-on impact on the flow of information that goes into the front office tools and then ultimately into the back office. So I think the combination of both is extremely important, but broker on its own can definitely influence quite a lot of the change.
Okay, so yeah, both a case of some collaboration and some in-house control of your own destiny when it comes to digitization. Does anybody else want to kick in on the topic of, how the market should collaborate to drive change in this field? Any specific things that you would suggest could help further this goal of digitization? Deepti.
I'll go, Fiona. I think the one point I wanted to mention, based on all of our conversations, has been about the mindset. It's amazing how we focus on the tools and the most latest technology and all of that, but the mindset has to change as well, because if we are not determined to make the change, then any number of or any kind of most modern tools will not happen. And that's kind of where we are getting to within Volante as well. We start off kind of very similar to what Menji said, that we started off saying, how can finance be a value-adding function rather than a report-generating function? And to Serge's point, we always look at the past. I mean, we do scenarios, but they're so superficial that I think even us, if we had to sit there and analyze them, I think we wouldn't really put a green flag and say that's a done thing. So because the market is so much looking in the past, it's not the quickest in all of the changes that it has brought about. It's important that people think, where do we want to take the whole London insurance market? What do we want to achieve? I think those goals have to be set in a collaborative way, because it's such an intertwined and intermingled insurance world that if only one party makes a change, the rest will not flow through exactly how Serge said. It has to happen together. So I do think that the fundamental way in which we can bring about change and make it effective over the long term is to think about change of mindset collaboratively, and think about maybe some common tools that we all can use, because I'd love to know what happens in the outside insurance world. All of us have worked in insurance for long enough that we think that there is a world outside that probably is a lot more efficient than us. And I think it's important to take the lessons that they've learned.
Mm-hmm. Okay, I think this issue of mindset kind of brings us on to another topic that I wanted to talk about, and which we've actually had a question from the floor about as well. So the question from the floor is, can we give our views on what the role of CFOs should be in influencing an insurance organisation's underwriting risk appetite, particularly in light of the challenge of COVID and BI issues? So how should CFOs be trying to influence underwriting risk appetite across the board? Perhaps one of the CFOs. Should we start with Kevin and then Benji?
I think, on that point, at Poolre is slightly different. Anyone that's aware of how Poolre operates, we're a reinsurance company, and we're a mutual, so we essentially have to take on the insurance that's ceded to us by our members. So that doesn't have a major impact on our risk appetite. Our risk appetite is that we must, due to the statutory rules in place around us, we must take it on. So I'll probably have to. Benji's probably more suited to answer that question.
Okay, I'll give it a go. I mean, it's a very good question, and the answer is it's not obvious, right? So I certainly, as a CFO, I don't think it's my job to tell the underwriters what they should and shouldn't be underwriting. But what I think I can do is bring a number of different groups within the organization together to look at what it means for the company as a whole. So if we take input from underwriters in terms of the plans that they may have for next year, in terms of the business they would like to write and the rates online at which they can achieve it, if I combine that with some assessments of risk, and we put that all together to figure out how much capital and or reinsurance we might need to buy, how much capital we might need to have and how much reinsurance we might need to have, and what does this combined effort look like in terms of financial results, that's where I think the CFO can contribute. And that is a forward-looking exercise which needs to be smart about how it looks at scenarios, to Deepti's earlier point. It can't be just a linear sort of planning exercise. We need to have something much more stochastic and much more sort of nuanced than that. But I think that's where the finance function can add value. I mean, I keep reminding within Convex there's a lot of excitement about doing things new and doing things differently, and I'm all for that, by the way. And it's great, and it's a very refreshing environment in which to operate. But at the end of the day, if whatever we do doesn't deliver numbers in US GAAP form that people can get their heads around, that unfortunately is the language in which any insurance company speaks to the rest of the world, to its investors and all the rest of it. So having some sense of what is the outcome of all of this likely to be, and what are shareholders or other investors going to think of it, that's I think the point at which the CFO adds value.
And just to add one more point to what Benji mentioned, it's equally important to build our business partnering as a finance lead from the organization across the other insurance, including underwriters, etc. And also bring in your finance intelligence analytics. It's quite important for you to kind of deep dive to understand and kind of know what is your profitability by line of business, what is your profitability by your product, and kind of understand your risk, etc. So that will kind of help, and the CFOs will help the other organization leaders to look at in a more diversified way, where you can actually drive your future or forward-looking decisions based on the analytics. So that's, I think, another tool that most of the CFOs could use to make or to advise better.
Okay. I guess we have a similar kind of HR type question as well from the floor while we're on this topic. The question is that London market finance talent has traditionally focused on accounting skill sets within commuting distance of EC3. How will this evolve? Do we see more use of partnering functions run from outside EC3, even outside the UK? Will there be more use of staff with non-traditional finance backgrounds?
I think the question has got its answers already. Of course, there will be a mix of things like that. Different skill sets that we can bring from other parts of the world. People who think also differently. So it's all about the diversity that we are about, which will definitely enrich the industry that sure, and it's already starting. That's also for sure.
I think the only thing I'd add to that, if I may, Fiona, is that, you know, I think in order to have that change, which I welcome, by the way, I think that the digitization of finance, which we've been talking about, is also an important aspect. I mean, if it is the case that 85% of what the finance function does is churning out spreadsheets and reconciling numbers, you're not going to attract new talent into the industry, and you're going to be stuck with the accountants that are within walking distance of EC3, and that's not a very sort of bright-looking future. So I think you need to make some significant moves to digitize what you're doing, to automate what you're doing, to integrate what you're doing, so that you can focus the activities of the finance function on the more value-added bits of it. And I think to the point about broadening the talent pool, I mean, we have worked incredibly successfully with WNS. I'm pleased to say, and it really makes no difference to me whether the person I'm speaking to is in EC3 at home in Yorkshire or in Pune in India. It's all the same now when we're working in this sort of remote way. I do think there are other challenges that come to the fore, though, when we do that, and this is picking up on something I wanted to mention when Kevin was speaking earlier. I think there is a realization. I think the technology has adapted incredibly well to us all working from home, and much better than I thought it would, actually. We're lucky as an organization that we don't have any servers, and I think we have a modern infrastructure, and we thought we'd get an advantage from that. But actually, everybody seems to have adapted incredibly well. It's the first time I've ever heard IT functions being celebrated universally as the heroes of the day, and they've done a wonderful job. Okay, so we now know we can all do it, which is great. But managing an organization that exists in that form, I think, does bring different challenges that we haven't necessarily understood. So we're a growing organization. We're now 300 people, having started a year and a half ago. 180 of those people have arrived since lockdown. So I've hired people I've never met. It is quite difficult. Okay, so you can't get to know them in the same way that you could if you have lunch with them or meet them for a drink after work or whatever it might be. There is desire clearly building, and after a few months of lockdown, people did want to come back into the office. But everybody wants to come in Tuesday, Wednesday, or Thursday. Nobody wants to come in on Monday or Friday. So how's that going to work? If we still have to maintain the size of offices to accommodate everybody on those middle days of the week, that doesn't really make sense either. So I think there's a lot of things that we need to think through in order to make this new world work effectively.
And as per the London Market 2020 report, if you look at our total resource in the London market, actually kind of gone down by 5,000 from 52 to 47,000 overall. And that is actually due to multiple reasons, including outsourcing, automation, etc. And as Benji rightly mentioned, it's a two-way street where now the finance resources kind of started to acquire new skills. They have started to learn about technology. They have started to learn about risk and more about insurance. And similarly, the non-financial resources also started to learn about finance, because that's really helping us to kind of talk the same language and be on the same page. So it's very important that you kind of prepare the new age thinking resources and the talent that you build for today, who can actually kind of cope up the tomorrow's change.
Just on a sort of the same vein as what Benji was discussing, and it leads on to the sort of the increase in working in a remote environment and sort of people as the difference in managing people as well in a remote environment, and development of talent, I think is a huge point. We've onboarded a few people remotely as well. We were again quite pleasantly surprised as to how well that went. But one thing personally I've noticed is the difference in managing people remotely. Some people, as you probably all know, work very well on their own. Some people need more hands-on sort of guidance and help. So you definitely have to adjust the way you deal with people. And I think one of the things I've noticed is you have to sort of give them more ownership and responsibility. You're not in the same physical location, so you can't sort of check up to see how progress is going. You need to sort of give them the ownership, let them know their responsibilities and the expectations. So I think in that aspect, it's good for employees and for your colleagues for their development. But on that development point, I do envisage difficulties attracting new talent if they don't have that sort of face-to-face development. I think you learn a lot more by talking with people and working together. We have a lot of younger people that work with us, and I do wonder whether their sort of development, the speed of it will may be hindered by not having that sort of closer supervision. So I definitely think that we'll be talking about the digital side, but there's also the human element that has to be carefully considered as well.
Mm-hmm. Okay.
I think, can I just ask one other thing, Fiona, is I think when we talk about evolving and changing within finance, the kind of talent, it's also important that we sell what's changing about finance to the talent, because if we don't go and tell the I don't know, kids in the university that it's no longer the traditional finance role where you sit there and post journals, it's not gonna happen. So we will not be able to attract the talent, because the mindset and the overall we accountants are known to be in a box. Let's face it, everyone has certain set ideas about how we do things, and that's how it has been for centuries. I think to Benji's point, it's not even decades, it's centuries. So if we want to attract fresh talent with different kind of skill set, then we need to make sure that professional bodies like ACCA or the CMAs kind of go ahead and also market that, and also established organizations or whatever way it works to get that kind of placement into the industry, and that's when the whole change will come through.
Okay, so we've come back around to more of the basics of remote working, making everything virtual and digitized. I do want to go back to one theme that we didn't cover initially, surrounding how complicated it might be, or what are some of the complications we think of moving from a more manual system or legacy systems to more advanced systems. Can we pick up this topic? We'll perhaps start with Beadle and then hear from some of the companies that have experience in transitioning away from legacy systems.
Sure. So as we know, the elephant in the room is legacy for any mature organizations, right? And it's about the urgency of moving to a more digital savvy and cloud-based environment, which kind of the current scenario kind of pushing people to adapt to and accelerate to the change. So as Deepti rightly said, when you say legacy comes in two worlds. One is the old platform that you have, and the other, the famous legacy, is our spreadsheets, right? We love spreadsheets. If you look at the London market, I can definitely vouch for more than half of the organization. Still, actually, they are doing their spreadsheets for most of the processes, or almost some of the critical processes, including like reinsurance accounting, right? Credit control, financial reporting, cash flow forecast, or budgeting, tax, reserves calculations. We have a ERP system as a heart of, or the backbone of finance function always, right? But the ERP alone can't provide everything what you want or what is being asked to deliver from a finance organization. And that's where it's quite important for you to have a more diversified digital infrastructure to ensure that you kind of start working towards from the ERP and how do you kind of get other digital tools around to deliver the more finance savvy or digital savvy processes. So API actually plays a major role as well, as you know. but it's not the silver bullet. And most kind of, I would say, often abused word to avoid transformation or the immediate transformation. But still, it's quite very important and plays a major role in terms of connecting systems, integrated and convergence of the systems, which helps to reduce all the manual work of validating numbers, etc. manually. With that, it's very important to look at hyper-automation. How do you kind of bring in hyper-automation like microbots, AI, blockchain, and ML, which actually kind of started to play a major role in the industry. We actually haven't kind of seen that happening in the last 5 years in finance profession. But now we kind of to see more and more digital savvy tools coming in to bridge the gap between an ERP and the rest of the world. So it's quite important to ensure that we have a digital ecosystem which is kind of built to last, where we can actually build in a more sustainable way rather than kind of looking at it in a more short-term fix.
Okay. Yeah, I think that sort of long-term vision is one that I'd like to pick up shortly, but I do want to switch back to one question from the floor, which we've had come in. Again, this is coming back to, it feels like the HR or the sort of organizational questions are very, very much a key focus here. So the question is that successful digitization can only be successful, or at least this questioner agrees with us that it can only be successful if it's directed by the right strategy and supported by the CFO, with the driver for change starting at the top. However, the top of the organization is often removed from the day-to-day doing at the coalface. So how would our panel encourage and take on board innovation from all levels of the organization?
If I can start on that, I'm a firm believer of the fact that yes, you need some form of trigger from the top, and more importantly, you need the support from the top. But change will rarely deliver what it's meant to deliver, unless if everyone embraces that, or at least more people than not do embrace that. And for me, it's all about making sure that change is almost seen as an embedded BAU part of everybody's role. Everybody can contribute to changing an organization at their own level, and that's fine, and making sure that they are empowered to do so almost on a daily basis, and that they are rewarded for doing so. It's like, for instance, on a monthly basis, I change that process, I remove the manual aspect of it, and that reduces the amount of work by 1 hour. Brilliant. Bring it on board. It's not always about big bang kind of change. Actually, those types of changes all too often tend to fail more than the kind of more seamless embedded parts of the change. And for me, it's all down to really empowering the people and relaying that support from the senior management.
Can I just echo that? I think Serge makes some very, very good points there. I mean, change has to start at the top, really, and has to be bought into at the top, but you can't effect change by simply coming up with a strategy memo saying we're going to change and circulating it around via email or whatever. I remember once talking to a Columbia Business School professor who said, if you want to change something in an organization, you've got to find a way to say it really crisply, concisely and clearly, and then you have to repeat it 700 times. And it's astonishing how many times you have to deliver the message in order to get it through to people that actually, you know, gravity, doing what you always did, isn't necessarily the right thing to do going forward. We want you to change. We encourage you to change. We'll help you to change. You know, in our own organization, you know, I can certainly see situations where we have automated, for example, reconciliations, and yet you still find people checking the reconciliations manually just to be sure that the machine did what it was supposed to do. Well, we've got to get away from that. Okay, we've got to move forward, and we've got to embrace the technology and run with it. But it's a big management challenge to communicate that right through an organization, no doubt about it.
We have quite an interesting question here as well, given that we've talked a little bit about the dependence and overlove of the market for spreadsheets. Question is, how do we assess the business risk that spreadsheets pose to an organization?
There's plenty of risks with an Excel spreadsheet. The more data it contains, the more risks of errors it creates. You just cannot run a modern organization, a big organization on Excel spreadsheets. It just doesn't make sense anymore. So gradually removing the need for Excel spreadsheets, we've starting with almost what I would call quasi Excel spreadsheets, so better tools, but that still have use the principle of an Excel spreadsheet, but that have got much better embedded controls in them, and then winning the people from these sorts of solutions as well. For me, is really important. Investing in systems that do that really makes sense.
Anybody else want to kick in, or that seems
and also it's equally important. It's okay to have spreadsheet in the interim, and as a tactical solution, you need to ensure that you have the right level of controls. And most of the organizations have now started to outsource or automate the controls as well, using micro bots and automations where you can auto-validate the numbers which is kind of churning out from spreadsheets, right? So we need to ensure that every spreadsheet is built as a document where you can audit trail to ensure that all the numbers are actually kind of correct and checked through our controls. And you can't actually humanly possible to check each and every macro that you have built in. So therefore, it's quite important to kind of bring in some of the automated controls which can kind of help in the tactical in the short term until you kind of have a plan to move them to a more sustainable platform-based delivery.
Okay. So we're talking about sustainability here. I guess sort of final theme I'd like to cover is how do we feel that the London insurance finance market should be trying to future-proof its operations against whatever tomorrow's challenges could bring. So if we can start with Serge, and then we'll see who else would like to kick in on this.
Yeah. So for me, future-proofing is an interesting concept, but I'm not sure that we can really constantly do that, because let's face it, things do change so quickly and will continue to change even more quickly going forward. So as far as I'm concerned, it's working very closely with clearly the IT structure of the business to ensure that we have a clear vision, at least for the next 2 to 3 years, and then beyond, in terms of for the more mature businesses replacing legacy systems. That is really important. But as per my previous point, making sure that there are more and more components of change that are embedded within the organization. That's BAU. Change is the new norm, and more people need to be empowered to deal with that. We've clearly the vision from senior management, for me, is extremely important.
Mm-hmm.
Fiona, if I may, I mean, I think it's a really interesting and a really challenging question. Who knows what the future will bring? I mean, it'll certainly be different than we all expect right now. And so, to me, the answer to this, actually, it's pretty simple. It's all about data. We need to have our data really, really tightly controlled. We need to know where it is. It needs to be in a single place. It needs to be defined. We need to know exactly what it is. And then if we have the underlying data in a shape where it can be accessed by any system, whatever system for whatever purpose, then we stand a chance of being able to deliver whatever finance is required to deliver going forward. But if we've lost control of our data, if it's sitting in multiple systems, if there are different versions of it that don't reconcile easily or can't be reconciled easily, then we're in a mess, and we'll always be in a mess, no matter what the future holds. So for me, I think data is the key to it all.
I think that comes down to we're looking at quite higher up here. Companies need a well thought out digital strategy, something that clearly defines how they're going to use technology, how they're going to use data, how they're going to use that for their to create competitive advantages. But like Benji was saying, having a strategy is brilliant, but you also need a framework on how you're going to implement that, the stages you're going to implement that in, to give yourself a sort of a blueprint of when changes are going to be made and how you're going to evolve to the changing conditions. And so having a systematic sort of implementation plan is vital to make sure that strategy is actually implemented. Like you said, saying it 700 times plus, I would expect is probably what's going to be required. But so it's nothing is going to stay the same. But we still need to plan, because obviously if we don't plan, we're probably going to end up in even a worse place than what we potentially could be. So I definitely think a long-term strategic plan that's implemented correctly is vital.
So 60 years ago, we kind of started with GE way. And then in 80s, we said Toyota way is the best, right? And then in 2000, we said Google way. And tomorrow it's going to be a new way, right? It's all on us. And change is going to be inevitable, as you know, with the social economic pressure and the climate change, etc. More uncertainty is created. And therefore, the sustainability reporting will become more in focus by all the regulators and by the wider community and the investors. And therefore, already we are seeing it, multiple changes, including IFRS 17 to all other regulatory requirements. So how do you kind of build an organization and a finance function which can be kind of more adaptive, agile, scalable, and resilient to the future? And for you to build something in that nature, it's quite important to invest in talent. So the new age thinking and the new talent and the open innovation is the way forward. And always you need to kind of do a pit stop. So if you take F1 racing, always they do a pit stop in between races. So that's the reality check that you need to keep on doing in the future to ensure that you're on track and you're kind of responding to the ever-changing demand from the market.
Yeah, I think if I may, just one last point I'd add to everything everyone's contributed is simplification. I think we as accountants are really well known for looking in a very convoluted way to a very simple concept. So I think we have to keep things simple, and then the data will make complete sense. We love our little spreadsheets and make them as complicated as we want to. So if we keep it simple, keep it open, transparent, any new change, it's not going to happen overnight. We'll be ready for it.
Okay. Yeah, so that's great. I think that is all we have time for, but it certainly sounds like this difficult year has got us used to being prepared for those unexpected events, as everybody says, and has helped progress the cause of finance digitisation. So let's hope it keeps on that course. I'd like to thank our audience. I'd like to thank our panellists, Kevin, Deepti, Benji, Beadle and Serge. And thank you to WNS for sponsoring and working with us on this webinar. Take care, everybody. Goodbye.
Thank you.
Thank you.